Hi everyone, let's go over my low time frame bullish and bearish scenarios, including potential trading setup, starting with the low time frame Elliott Wave bullish scenario on Bitcoin, where this is a wave 1, 2, 3. This has to be the end of wave 4 before now a wave 5 to the upside towards, I think, the 2022 range highs is a very interesting target at 32.4k. The reason that I say that this wave 4 really has to end is because it already retraced super deep to the 0.5, which is still a valid target for a wave 4, but you don't want to see higher time frame candles close below the 0.5. We are now on the 1 hour time frame, and as you can see, we wicked below now 3 times. This was actually quite a big wick overnight for me. Didn't reach the invalidation just yet though, but if we go to the 30-minute, you can see that 30-minute candles did close below the 0.5 fib at the moment, which usually is a maximum target for a wave 4 taken from the low of 2 to the high of wave 3. So the longer we are going to stay down here, the less likely this bullish scenario becomes, because after this wick to the downside, you really want to see price to the upside. You want to see it push to the upside as well, because that is also what we're looking for, right? In the potential trading scenario, where the safer option is to wait for a little bit of a structure to the upside, preferably in 5 waves. And for me, usually at minimum the 15-minute time frame, where I can see or at least spot a little bit of a 5-wave structure. And then the retracement, that is the potential long scenario, where longs can then be laddered in the retracement, stop loss below the wick, and then towards the upside we go. Now, 2 other things that I think are important is, first of all, the CVD over here. So when we look at the CVD and we go to the 1 hour time frame on the CVD, you will see that we don't have bearish divergences yet. And usually if this is such a big reversal point and we have a lot more downside to go, usually I like to see at least some bearish divergences. I don't care if it's right at the high or with these highs or somewhere, but so far we haven't seen bearish divergences just yet during this move to the downside. Instead, it's actually bullish. But yeah, we don't have a lower high on the price and a higher high on CVD, as you can see with the lines as well. And instead, if we zoom out just a little bit, you will see that we just keep making already the whole run up. We keep making bullish divergences. So we have over here, we have lows, we made higher lows, but lower lows, as you can see on the CVD in yellow, and now also in blue. And in blue, we made lower lows with this range over here. So we have a higher low in price, but a lower low over here on the blue line as well. Now, the yellow line is the Bybit CVD. The blue line is the aggregated CVD of all the platforms. So it's like an average basically from all. And that is also what where I pulled the golden pocket from. So I pulled it from this low over here to the high of wave 3. And the CVD is also in blue from this low to the lows that we made right now. So a higher low in price, lower low in CVD, bullish divergences. And we really want to see these ones play out right now, because if price is going to go down once more, oh boy, then we have more downside to go for sure. And I think that the next target for me towards the downside is at 28k, basically between 28.2k and 27.8k. And then if we go this low right now, I can imagine we're going to find even lower prices to come. So for the more bullish scenario, it's very important price is going to find support at where it is now. I mentioned that it's all about this range in the previous 2 videos as well. I have the key level over here, which is the high of this very little range, like order block one could say. This is very important for eventually more upside. And with the wick that we have made overnight, for me, we basically, if I go to the 30 swing failure pattern, the lows before, so these lows over here, we wick below, grab liquidity, moving to the upside. This is really what you want to see. You want to see continuation now before eventually, potentially then, this trading setup is going to be activated as well. If we then go to the bearish scenario, the first bearish out of the 2 that I have, the first one is that this is the high of wave 5. So if I zoom out, we then have a wave 1, 2, 3, 4, and then a wave 5. Wave 4 is very short compared to wave 2, and usually a wave 4 is longer in time compared to a wave 2. So this is something I don't really like to see usually. Then we have wave 5 over here at the highs. Now, this can be a wave 5, yes, not necessarily per se the way it's counted here, because it can also be a 1, 2, 3, 4, 5 as in the bullish scenario, right? And that this wave 3 goes over here. However, the reason that this could have been a wave 5 is this is the most common target for a wave 5. volume at this moment in time between this wave 3 and this wave 5 was slowing down as well. We saw lower volume coming in, and that also gave the potential short scenario the moment price started to break down a little bit. So that is fine, of course, as we are at important support for potentially the bullish scenario. At least a take profit, if not a closure of the trade, is recommended if you are a trader. No financial advice, but of course, based on how I could trade Elliott Waves, it's important to know, hey, we are at a bullish support area, so that could be an area where I want to at least take something off. Stop loss at break even, again, no financial advice, but this is educational based on Elliott Waves. And then the move to the downside is basically a 1-2-1-2. So we have a wave 1 impulsively, wave 2, another 1-2 with a leading diagonal in the 1, 3 waves in 2. Then we have this as a wave 3, which, well, actually I should now make the wick the wave 3. Or actually not in this per se scenario. So if we go back, then this is the low of wave 3 at the 2.618, which is fine. We can count a 5-wave structure in here. And then this wick can be part of a flat scenario as well. So if I actually go to the 15-minute and we zoom in a little bit, then we can also say, hey, this might be a 3-wave structure. A 3-wave structure, as you can see, one can count quite a clear 3-wave structure as well in this structure over here. And then we have a 5-wave structure to the upside in a wave C, creating an ABC. And if we pull the fibs for an expanding flat wave B, then you will see that price bounced perfectly in the most common target area for a wave B expanding flat, which is this area as well. So also on the bearish side, everything so far looks good for potentially continuation to the downside. The invalidation for this scenario is taking the high of wave 2. And also if we look at a potential bounce for this wave 4 over here, it is quite interesting that we do have a naked point of control now at 29.9k. So right at the 0.5 for potentially this wave 4, and then a 1, 2, 3, 4. Then we expect a yellow 5 to end. The minimum target for a wave 3 usually in blue is the 1.618 over here. So you would expect a 1, 2, 3, where the minimum target for wave 3 extended is the 1.618. So you definitely want to see more downside in the yellow count for a wave 5 before then 3 can be finished, then 4, and then eventually 5 to the downside, right? So if we then go for the second scenario over here, that is the 1-2, and then this is another 1-2 scenario. And the reason for that is that in the other bearish scenario over here, this wave 1 did not take the low of this wave 1, and usually I like to see these type of structures, in this being a 1-2-1-2, where the second wave 1 takes the low of the first wave 1. And also the volume is still slowing down. As you can see, volume is not increasing to the downside, it is slowing down to the downside, which is either a bullish sign or it is a sign that this second wave 1 is now in. We have a 2 and the bigger 3 is yet to come, where volume will increase. So that is the reason why I got this scenario on the chart as well, where then this is the first wave. We're now working on the second wave to the upside. Invalidation is taking the high of wave 2. The 0.5 has nice confluence with the daily naked point of control as well. However, if we look more to the upside, the 786, which is also a common target for wave 2, also has confluence with a daily and a weekly naked point of control level. So that can be quite an interesting area as well. And as you can see, the white target box, which we found support, broke. That can now act as resistance as well. Now, the most common targets for a wave 2 are between the 0.5 and the 786 Fibonacci, which is basically between 29.9k and 30.3k. So that is something to keep into account. Of course, first of all, we're going to wait and see in the upcoming hours what this price action is going to do towards the upside. Is it going to create a structure or not? Is the bullish scenario going to be more likely than the bearish one? We have to wait at how price is going to move itself towards the upside. I hope this video was helpful or valuable to you. I'd like to thank you for watching and subscribing, and I will see you at the next one. Bye bye.